Every individual altcoin goes to zero versus Bitcoin over time, but do you think people are going to stop gambling and stop pumping and dumping? Like they won't. Show them this 200 lira bill, right? And I should say, when this 200 lira bill is worth $100, we're going to be rich because it's going to 20x in dollar terms. I still think we'll hit $1 million. That's kind of my base case, sat cent parity, as they say. So one Satoshi worth 1 penny, which is $1 million a coin. So my base case is that we are still in a 4-year cycle and believe that until I see one not.
Hey guys, welcome back to the show today. I'm here with Swan CEO, Cory. How are you doing today?
Hey, what's up, Mauricio? Nice to meet you and glad to be on.
Really glad we are doing this together. So thank you so much. I really appreciate it. If you don't mind, can you tell us how have you started your journey into Bitcoin? How have you discovered it?
Yeah, so this is fun because people always ask me, am I too late? Or they have misgivings about hearing about it, and now they're hearing about it again, but they wish they had gotten in, 4 years ago when they heard about it. So I had three swings and misses before I finally dug in and actually got into it. So someone gave me some Bitcoin at a tech conference in January of 2014, and I promptly didn't pay attention to it. I was busy in startup land and raising money and advising and investing and things like that, and didn't pay attention and lost the Bitcoin, lost the wallet. And then in Christmas of 2015, I was helping a friend bundle together, 8 startup stakes, including startup stakes in a couple of Bitcoin companies into an SPV because he wanted to monetize some of his, angel and advisor shares. And so I ended up doing, slides on a couple of early Bitcoin startups, including 21 Co, which became Earn, which was Balaji's company that sold to Coinbase. Didn't take, I just didn't go past the surface level, and it didn't take. And then another time, a close friend of mine, the guy that actually recommended me to University of Chicago for business school, was an early Bitcoin miner. And I didn't even remember this for years later, but we were out to dinner in New York, I think in late 2014, and he was trying to get me into Bitcoin and Bitcoin mining and explaining all this stuff to me over dinner. It just went in one ear and out the other. So it wasn't until all the noise around the price rise in the spring of 2017 that I finally got sucked in. It was just really noisy in my personal and professional network, and I finally took a look and bought some Bitcoin, and never looked back since then. So about 8 years in, and I feel like I'm late. Uh, so, just for anybody listening and getting interested in Bitcoin here in 2025, I promise you, when you look back on this from 2033, you're going to feel like you were late to it, but I promise you, you're actually early.
Super well said. It's so interesting whenever I speak to someone like yourself and we share the stories and people think it's a nice, happy journey where everything was, unicorns and rainbows, where in fact you had to go through some serious issues to acquire it, to understand it. There was less education around, and also swings. Like we used to see 90% corrections. I couldn't agree more. Still early days. Do you think Bitcoin is the pristine collateral?
So I look, it happens to be that, but that's basically just a symptom of it being the best monetary technology that we've ever had. So that's what it is first and foremost. And then it also is great collateral for loans, and it's great collateral for preferred share offerings like what you see MicroStrategy creating. It's fantastic capital, but it's fantastic capital because it's the most attractive money.
Is there a use case for gold in 2025? What do you think?
Yeah, I think there's still a use case. I mean, I think there's people that trust the long history of gold as a store of value, and I think that's being borne out right now in a very inflationary environment, and in both senses, both prices inflating, but also money printing, monetary inflation. Gold is holding its own, and in as much as somewhere, if you think there are, if history is one vector, and price appreciation or purchasing power appreciation or stability is the other vector. Like gold's somewhere out there close to the efficient frontier. And I can understand why people that already know and trust gold would want to have some. I think if you understand Bitcoin really deeply and really believe in, I think if you understand it, you actually know that it's going to surpass gold, and that's basically a certainty. And so I don't really feel any need personally to like hedge my Bitcoin position with some gold, but I do see institutional wealth managers, making that case to high net worth families and companies that, maybe even if you do have a strong Bitcoin thesis, that you could hedge it with 10% of that being in gold and have kind of like a sound money portfolio.
And you mentioned taking over gold. So that roughly would be at 10x because now gold is about 20 trillion, give or take, depending on the day. And Bitcoin is just hovering around 2 trillion. So do you think we would see $1 million Bitcoin?
Oh, I do. Yeah. So I think it'll happen sometime between 2029 and call it maybe 2035. I still think we'll hit $1 million before 2030. So that's kind of my base case that there's more than 50% chance that we see sat cent parity, as they say. So one Satoshi worth 1 penny, which is $1 million a coin before 2030 is over. I do think I think gold will rise as well. So I think you probably don't pass gold until you're at around probably 40 trillion market cap for Bitcoin, or $2 million a coin, I think is when you're going to have Bitcoin gold market cap parity. I don't think that Bitcoin actually starts to demonetize gold until probably the 2040s, maybe 2050s.
Now that we've seen different players entering the game, do you think the cycles are going to get impacted and maybe broken completely?
I think someday cycles will break, but I don't think it's this time. So my base case is that we are still in a 4-year cycle, and believe that until I see one not. So until we see a higher price rise, mid-cycle, not on these 4-year peaks like 13, 17, 21, 25. I mean, by definition, because this one hasn't happened yet, there's a better chance that the peak is in 2026 than previous cycles because it didn't happen in those. So that's definitionally true. But there's not much information conveyed when people say they think there's a better chance of the peak being after the new year, because that's true. It's more than zero. But the impact of the halvings decreases over time. I think we've seen that the price rises and the price falls are muted each cycle. I can just basically tell you kind of what my base case is, and this is just kind of how I'm modeling capital allocation and corp dev planning around Swan is, I see us getting to something like, I'd say somewhere between like 150 and 225, something like that, will be kind of like the natural high. And then from there would naturally be something like a 50% drawdown. The thing is, if there is then a very aggressive blow off top where you double in 4 to 6 weeks, let's say, and so you see something in the 300s or something like that, you'll give all that back. Plus, you'll also still give back the 40 or 50% that you were going to go down anyway. So I would just kind of like, there may be a blow off top, and I think there's a lot of benefit to painting the tape up there and establishing some price history and some price memory so it doesn't feel too astronomical when you get back there again. Like I remember it wasn't a big deal to us when we hit 73 in early 24, I think, because we had already been to 69 before in 2021. So, I kind of root for a high blow off top, even though it means that the fall will be ugly, because there's very little volume that actually gets traded at the very pico top. I've only actually met one person ever that really unloaded the truck and bought all his Bitcoin at like 68, 69K in 2021. And he held, and he's fine. But I've only ever met one person that actually bought all their Bitcoin basically at the peak.
People either DCA into it, so they buy
Hmm.
every now and then, but going all in it pays off because eventually that top becomes a bottom. But like you said, you have to stomach it, right?
Yeah. Buying the top forever.
Exactly. And I agree with you. I have a monthly call with Sina and Plan C, and we go through, all those metrics. And I'm super fascinated by math. I completely agree with you. I'm also expecting two type of scenario. If we blow up fast, we will correct longer and much harder. Whether if we just build a staircase and we go in maybe until January, February, or even before October, November, 150, 180. The 180 is my number. I think, I don't know, for some reason it's calling me, but it doesn't mean anything. I don't have a crystal ball. It's just a hinge, just a feeling. If we go up to those numbers like 180, 190, we're not going to correct 80%. That's not going to happen. On the contrary, like you said, though, if we shoot up to 350 or even 400 for what it's worth, well, then, yeah, we'll see a much larger correction.
One way to think about this is, the previous corrections have been like, there was like a 94% correction and 86% correction, and the last one I think was 77. And so it will just be a victory if the peak to trough is less than 70% drawdown. Like that's a victory, which is a weird thing because that sounds horrendous, but it would be the smallest correction in Bitcoin history at the end of a cycle if we keep it less than 70%. So let's just put that in perspective. Another fun with numbers game that I like is we've actually already broken a geometric reduction pattern. I didn't know you hang out with Cena and Plan C. I talked to those guys as well, and I like this one a lot. So the rise from the trough in, what was it, 20, after the rise to 30, it dropped to 2, and then it went to 1100, right? So that was a 550x increase. And then the next increase was basically from like 180, right? Was the trough in 2014, at the end of 2014, and it went to 19,700 in 2017. That was 110x. So it went from 550x to 110x, an 80% reduction. So geometrically reducing increase. Then we bottomed out in 2018 at 3150 and rose to 69.2, 69.4, something like that. That was 22x, another 80% reduction. Weird, right? So 550, 110, 22. And so, we bottomed out at like 15.7 or something like that. And we already destroyed that geometric reduction, because that would have been, basically back to 70K for a 4.4x. So, in that respect, we stopped reducing geometrically as far as the trough to peak rises of these bull markets. So we are in new territory now in that respect, because we're already up from 15.7 to, we hit 123 already. So that's probably an 8x or something.
The trajectory is up, but the price is getting closer to the line, right? So instead of being volatile in either way, so we won't correct as much, but also we won't pump as much. I believe it's going to be more mellow.
The institutionalization of Bitcoin, the way it has begun to happen, that's the wild card, and we just don't know what's going to happen. Like, even it could just be as simple as one product catching fire, right? And I think the first product that looks like it could be that thing that really just breaks the dam is Stretch, the MicroStrategy product, because that looks so attractive, and I haven't really mathed out the capacity of that, but it sucks up so much capital, and you buy the Bitcoin with it, and if that causes like any increase in the equity, and they get back to the ATMs, and then it drives like more interest in the other preferreds. I mean, let alone any of these fast followers, the other 20 contenders in the, leveraged Bitcoin equity space that might try to come and do similar things as they start to hit scale and can issue preferreds. And now you have different flavors of it, and, different jurisdictional arbitrage type plays. People are just being very creative, trying to think about what jurisdictions to be able to offer securities in. This is starting to get really fascinating, and it could just be too much of a flood of capital for the negative animal spirits to actually gain much traction and cause a big fall. That is possible.
I agree 100% with you. And we've just seen Trump signing an executive order allowing the 401ks money flooding in, right? So clearly the new administration is putting some weight behind, whether before everything was blocked. Even the ETF itself is just literally like almost 2 years, let's say, because it was January 2024, right? So we haven't even gotten to 2 years yet. And look how much money is flying in.
The 401ks are going to allocate to ETFs, not to spot real Bitcoin. So that's going to be another huge, and that's, I'm sure, who lobbied for it, right? It was probably BlackRock and Fidelity and those guys lobbying for it. But that's who's going to get the bulk of it. It'll just be them buying a ticker.
It took forever to happen, and now that they have the green light. By the way, the in-kind ETF is also apparently happening, which took me by surprise. I was not expecting it so fast.
It doesn't change much because it's still only for authorized participants. So it really is kind of a bit of a nothing burger. But yeah, it's still moving things in the right direction.
The ETF is an asset that is going to win no matter what. So let's say if BlackRock is selling the idea of the ETF to some clients, is pitching the idea to buy the ETF, and the client decides to buy Bitcoin spot instead, well, they win because the price goes up. There's never been an ETF where if the client goes and buys it at the source, the ETF is going to benefit from it, as far as I'm concerned. So this is going to come in so aggressively. And I think at this point, BlackRock and all these guys, they don't even care if they buy it. Of course, they have a commission, they have a fee. But if the client decides to buy the asset, themselves and do self-custody, well, they're still winning, right?
Yeah, in as much as, they benefit from a price rise as well. But I guess the same could be said for, anybody that has a Mag 7 stock, they're benefiting from people going and buying the stock directly as well, that fund manager. So I'm not sure that that's necessarily a totally new dynamic, but it is certainly present.
And you deal with a lot of individuals, they want to purchase Bitcoin and they come to you, of course, Swan, and I want to talk about it. Is there a pattern you see or something that they are afraid about?
Yeah, so I mean, the first thing that you're basically selling is, or I guess it's not even selling, it's like what you're giving them is education, because Bitcoin is one of these things where you can really only buy and hold it in size if you understand it. And so they're really coming to you for conviction. They're coming to you to learn. I always hear from our private sales reps that, 95% of their first couple hours that they spend with a client is just about Bitcoin. Very little about our products and services. That's simple. That's also secondary. What they're there for is to have a Bitcoin guy or a Bitcoin gal that they can talk to, that they can ask their questions and not have to pour through another couple hundred hours of podcasts just to get their four remaining questions answered. And then they really want to know that somebody has their back and is there to kind of handhold them as they set up their cold storage. And our whole client service and sales team kind of helps with that and supports a bunch of different devices with good advice. And they've just been in the game. A lot of our people have been in Bitcoin for 10 plus years, and they kind of know all these things cold and play with them all the time. So it's really nice to have some hand holding. And I think the hardest problem in Bitcoin is definitely custody. I think it's a bearer asset, and it's something that we are not used to. The last 100 plus years, we humans have been very bad at responsibly holding on to our own assets. We just want an account somewhere and trust somebody else to hold it for us. And so I think having different flavors of custody on the spectrum from, fully self-sovereign all the way to kind of just treating it as an account, but at least you can still withdraw when you're ready, is the way to go. And I like that we have, really good advice on full self-custody, and over, I think 75-80% of the assets ever bought on Swan are in self-custody, which is great. We also have multi-sig, so Swan Vault is 2 out of 3, and you get 2 Jades, and we support it, extremely well, and did that in partnership with Blockstream. And then we have, obviously, you can have like a Swan fully custodial account in what we call Swan Safe, which has a bunch of layers of account protections and the lowest fraud rate losses in the industry, et cetera, et cetera. And that's in cold storage at BitGo. And then the one that we're working on that I think will launch probably next year is basically 3 accounts. So it's a multi-sig where you have one key that you can just sign biometrically with Swan, but then there's 2 other keys split across 2 institutions. And that's kind of the sweet spot for a lot of high net worth families where, they want to know that there isn't a single institution that can fail that would, cause it to go into receivership or just end up being messy or something like that. And they definitely don't want the institution to be able to collude. But they're also not comfortable holding the majority of the keys and being ultimately responsible for being able to move the coins just on their own. And so, that will probably do with something like, maybe a coin cover and one of the international BitGo entities holding 2 of the keys. So I think that'll kind of round it out. And I think that's the 4 stops along the spectrum of custody that will fill kind of all of our customer needs.
Yeah, and thank you for explaining it so well. Because sometimes I'm getting comments on my videos and people are saying, oh, it's just a bunch of words. Well, it's not. Because imagine if you are coming in cold. And then there is also the responsibility. Some people, they don't want to have it. They say, hey, I don't want to be in charge of losing everything. I'd rather point a finger to someone or something that if something goes
Yeah.
wrong, I can say, give me back my fiat.
Yeah. 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 The way to think about Swan, just to answer your first question, is really a diversified financial services company. And I think probably the best analogy is like a company like Fidelity in the United States grew up with an asset class, equities, as equities got to be popular, and people piled into the stock market in the 50s, 60s, 70s, and the company grew over the last 50 years to the behemoth that it is today. So we're doing similar. We obviously have brokerage, you have savings plans, you have retirement accounts, you have 3 flavors of custody, 4 soon. Asset-backed loans. We'll have a Bitcoin Rewards credit card out, hopefully by Q4. We'll be adding, I mean, we obviously have limit orders, target orders. We'll be adding Bitcoin interest on dollar accounts. And then over time, we're planning to add securities as well, so that you'll actually be able to access, Stride and Strife and Strike and all those types of things, and MSTR and Marathon and hopefully Swan stock and things like that through our website. So we intend to be kind of a full wallet manager for the Bitcoin investor, full, have 100% share of wallet on the wealth platform. So that's something that we want to do over the long haul. What's interesting is because it's still such early days, and we're really into, as you noted, it's about 18 months into full sort of market and regulatory acceptance of Bitcoin as a separate asset class, not part of crypto. and being this different beast that's inevitably going to grow. And so in these early days, the service model can't just be kind of self-serve like a Schwab or a Vanguard or Fidelity. It has to be much more high touch. And so our service model is much more like a private wealth management group. So it's kind of similar type of profile that you would see if you have a Goldman Sachs PWM rep or a Morgan Stanley PCS, private client services rep. That's the type of people that we hire. And so you kind of have, a quarterback to talk to on WhatsApp, phone, Zoom, whenever. They'll come and talk to you and your money manager, or do a Zoom with you at your country club and meet all your golf buddies. Or a lot of these times these people will like fly in and bring friends and go shooting, or go to a basketball game. So it's very much like a private client experience.
Like you said so well, Bitcoin is not crypto. It's actually part of my branding. And we've seen this cycle specifically, the dominance is going bananas. Is it going to be like this forever? Like, are altcoins dying?
I mean, every individual altcoin goes to zero versus Bitcoin over time, but do you think people are going to stop gambling and stop pumping and dumping? Like they won't. Like it's something that I think will exist for decades to come, and I don't think they'll get regulated out of existence. And it's just it's something that's going to be around. But there's survivorship bias in the index, right? In the Bitcoin index, it's always new coins. So if you take a snapshot of Bitcoin versus crypto, or for, could say like Bitcoin versus the top 20 from 2016, it's like over 90%. And then if you take it versus 2022, it's like over 85%. And like only right now, because there's 30 million altcoins, is crypto, 35% and Bitcoin 65%. But really, if you snapshot it versus the old cohorts, we ran the numbers and found, did this a couple years ago, I think in 2022, there were only two coins ever to have a new all-time high in Bitcoin terms in the history of coins. So Ripple had a higher high in Bitcoin terms in 2017 than it did in 2013. And Doge had a higher high after the Elon pump in 21 than its all-time high in 2017. Every other coin in history has never achieved its original all-time high in Bitcoin terms ever again. And so they are all pump and dumps, every single one of them. And obviously Ripple and Doge are way, way down since those second peaks.
I try to point it out all the time. Whenever you say to people, stop measuring the coin in fiat and plug in Bitcoin, go Bitcoin versus XRP, Bitcoin versus whatever
Yeah,
the coin might be. And you will quickly see how much it changes the
yeah,
situation over there. And I couldn't agree
yep.
more. People go to the casino, people buy scratch cards. We won't be able to take it away. I like to say all the time, I think whoever gets into altcoin, they are Bitcoiner, they just don't know yet.
That's just humans. I think that's not really true anymore. I think that was kind of true probably earlier when there was less information out, but I think everybody knows that it's not gambling. It's not like Vegas where you know what the house's take is. Like depending on the game, you know that the house takes 2% to 4%, maybe 6% on some of the worst games. It's different in crypto because it's hidden, and that's why I had to create a new word for it last year called Scambling, because it's a combination of scamming and gambling. And basically, the players think that they're gambling, but they're not. They're being scammed because the house, the creators, the founders, they're the ones getting the coins for free. And the house's rake is like 60 to 90%. So you think that you're gambling, but your upside is only like 10, 20% of the total pie. And the insiders are taking the rest. And it's opaque, it's not transparent, and there's no regulation. So there's nobody forcing these people to be honest about what they're actually doing. And so it is all basically just criminal scamming dressed up as innovation.
Yeah, that's a really good one. I like Scambling.
It's the price we have to pay for all this lax regulation on Bitcoin. A lot of that was basically paid for by the crypto industry campaign donations in the last cycle, and they can always point to Bitcoin as being like the one true moral high ground thing that they're backing. But, in the bargain, and we'll see if this actually ends up being a good bargain over time. I think it's net positive and I think it'll be worth it. But, basically all the scammers got get out of jail free cards and mostly got away with all of the bad things that they've done over the last 8 years.
Yeah, that's a really good point. And it feels like sometimes when I speak to someone who's in crypto and not necessarily in Bitcoin, they point at the price because they look at the price on the asset. They think, oh, whatever the coin is only 50 cents or 20 cents. So when it is going to go to where Bitcoin is, because they don't understand market cap, I'm going to be a millionaire basically. So it's probably also a lack of knowledge. But like you said, those people are going to get slapped.
I should, show them this 200 lira bill, right? And I should say, when this 200 lira bill is worth $100, we're going to be rich because it's going to 20x in dollar terms. Like there's just as much likelihood of that happening as one of these coins, right? But it's not going to happen. First time I came to Turkey was 2010, and it was 1.5 lira to the dollar. So a 200 lira bill would have been like what, $130? That's $5 today. It's 40 lira to the dollar.
Speaking of inflation, speaking of retail, are you expecting a wave of retail investors coming in, maybe at 150, 160? It doesn't feel like we've seen a bunch of them yet. It's mainly institutional buy, right?
So, I mean, I think they're just coming in through their brokerage account. I think that's where the top of funnel is. So, this is something that I forecast back in 2023. I said I thought the top of funnel would move from crypto to brokerages. So they used to come in and get fooled by coins for a year or two and then find Bitcoin. And that was kind of the cycle from 2017 to 2023. And I started talking about the ETF multiplier effect, and that basically it would dramatically improve the top of funnel because they'd have to say nice things about Bitcoin to get them into these products. And basically you would have this much larger top of funnel where people are buying an inferior product to real Bitcoin, but the education and the information that they're receiving is actually about Bitcoin. And that's much better for the Bitcoin industry as a top of funnel than having to fight $100 billion of scam VC marketing money lying about Bitcoin, which is what we faced from Andreessen Horowitz and Union Square Ventures and Coinbase and Ethereum Foundation from 17 to 23. And so it's nice that that has kind of dissipated. It completely changes basically the strategic approach for a Bitcoin financial services company, changes because you get a lot more people coming into Bitcoin, but you get pushed further down in the funnel. So you don't have to fight it out with Coinbase and Kraken and Binance and try to get that first buy. All you have to do basically is play kind of like frenemies with the ETFs and get involved in the conversations around institutional Bitcoin and as people get over something like 1% of their liquid net worth with Bitcoin price exposure, now they're exposed to podcasts, books. They start to think about actually having some money outside the system and going beyond just having an account with the banks that are causing all the problems in the first place. And then they want real Bitcoin and they come and find us.
Great place to land in, that's for sure. Where do you think stablecoins are going to come in? Because I have a feeling that for the next 6 months or so, they're going to come in storming into everyone's bank account, basically.
I think it'll take longer than that. I mean, banks move very slow in their IT departments, but I mean, it's just more digital dollars. Like, I just don't try say something to make me care. I don't care at all. I mean, why am I supposed to care? I'm a Bitcoiner. Like, what do I care about? I mean, I don't. It doesn't bother me one way or the other. I just don't care.
If anything, is marketing, right? If the CBDCs, which to me they are very much stablecoin, they share a lot of properties in common. If anything, it's advertisement, right? It's another way for people to understand why to have a Bitcoin parachute on their shoulder in the first place.
Yeah, I mean, I guess I think it was Circle spent so much time trying to suck up to the government to distinguish themselves from Tether. And eventually Tether figured out that the dominant strategy was to suck up to the government even harder and to let all the three-letter agencies into their database and to basically move Paolo to DC and, just like, install Lutnick in the White House and and have a direct line to the Trumps and just try to pay everybody off. So so now it's basically like a competition for who can be the most docile domestic pet of the Treasury so that you can extend the life of the dollar and keep on funding unfair taxation through inflation and endless wars.
I can't stand Circle. Don't even let me start on Coinbase. But if you are in charge of the printing press, let's say, it's fantastic to see the stablecoin coming in because you can expand your dominance even further. You can say, oh, now you don't even have to have a bank account to use my dollar. You can just download an app and there you go. You can decide to block transaction, stop transaction. You have basically the best of both if you are an evil soul because you can control and expand at the same time.
Yep, that's right.
That's why we have Bitcoin. that's why
Yeah.
we are Bitcoiners, right? How do you feel about the ETFs? Are you still expecting a huge amount of demand coming in, or you think at some point it's gonna stall?
It's just a function of demand for Bitcoin. It's just one of the channels that demand flows through now, it'll just keep on getting larger and larger and larger, and it'll be the largest source of profits for BlackRock 10 years from now.
Numbers are bananas. It's the fastest growing ETF in the history. I'm not surprised there.
Mhm.
But where do you stand on Bitcoin treasuries? Because we've seen popping up like mushrooms, right? Do you think it's going to be the phase of the cycle is going to be something we're going to experience only until the end of this bull market, or are you envisioning them staying in the long run?
I think in the end, the most common flavor of a leveraged Bitcoin equity or, Bitcoin treasury company that actually is not just putting some Bitcoin in their treasury, but actually focused on tapping capital markets with cap raises over and over again, earmarking the proceeds for buying Bitcoin. So, there's only probably, 15 of those pure plays on the list. And I put out a top 10 list for my Twitter handle, which you can probably see at the bottom of the screen, Cory Klippsten, every once in a while. But in 5 to 10 years, the most common thing is going to be companies that otherwise would have been good private equity targets. So they will be cash flowing businesses that are have unloved earnings multiples, and otherwise, there's 30 or 40 companies taken private off of NYSE and NASDAQ every year through private equity. And I think that's about the kind of flow that you'll expect of 30 to 40 companies a year turning into Bitcoin treasury companies that have that good profile. In these early days, when there's a bit of a rush and there's a theme and there's willing investors ready to launch these things, you're seeing a bunch of companies doing it with nothing. Like it's a shell and or a huge money losing business, and they're just plowing a bunch of investor capital into Bitcoin. I think that this is probably the cohort of companies that are going to be able to do that is probably the ones that get out the gate during this bull market, and some of them may make it and some of them may not. What I would just say is, I always focus on doing what's best for Bitcoin and Bitcoiners and actually trying to do things that can actually make a difference and that can actually like make a dent in this thing. Otherwise, it's not really worth my time and it's not worth Swan's company time. I will just say, if your little LBE penny stock, whatever, if it doesn't reach the scale where it's sucking in billions and then tens of billions of institutional capital, you didn't make a dent and it didn't matter. And it was just kind of like a little stock play. And that's fine. It's capitalism. And it just didn't really do anything for Bitcoin and Bitcoiners. Now, where I'll throw a bone to these people that are kind of like spreading bets across all these things and trying these little small plays is like, you don't know which ones are going to succeed from the beginning, right? So people making a bet on, say, Metaplanet and saying like, hey, I hope they hit scale. Well, it's starting to get kind of meaningful. They have 20,000 Bitcoins or whatever. Like it's starting to get kind of meaningful, and that's kind of interesting. And so when I look at these smaller ones, whether it's Sequans or was it H100 or something like that, and Smarter Web, and now you've got Impri, which took over like a failed e-bike company or something like that. Like you don't know how well connected these founders are and how well they're going to do, and are they going to command a premium. And we have no idea how it's going to play out with the ones that started with huge Bitcoin stacks out of the jump, like CEP and CEPO, the two Cantor SPACs that have hired Jack Mullers and Adam Back as their spokespeople. Like we won't know until those deals actually close and whether there's appetite to plow more capital into those things. We know they got off to a good start, but it really is just in its infancy, and there's so much more to see it play out. None of these things are levered up much to date, and none of them have like bought a whole bunch of new Bitcoin. So this idea that there's some big risk of unwind because the theme spread beyond MicroStrategy in Q2 and Q3 of this year is kind of provably false, because they're not levered up yet in any way. Most of them haven't even started buying any Bitcoin. They've had some Bitcoin contributed across a couple of them, but most of them haven't even bought the Bitcoin. Like Nakamoto and Pomp's thing, like they haven't even bought Bitcoin yet. So yeah, I don't see it as a risk. And I don't see anything in Strategy's model and balance sheet that worries me. I talk to Sharish pretty often and CJ and some of those guys, and like they've really modeled it out. Like you have to have a severe drawdown and Bitcoin has to stay down for more than 6 years and not come back. And then you start to hit some issues. But, that seems extremely unlikely for the next couple of decades at least.
To see a 6 years bear market, man, that's another level of bearishness. That's for
Yeah, I
sure.
mean, something I got bigger problems if that happens than my tiny
Yeah.
little MicroStrategy bag.
And also, like you said, I completely agree. The ETFs are painting the same pictures. Like there is about a dozen of them, but only a few are getting volume in. So I don't even know if they will manage to stick around in a
Yeah,
few years. The market always
yeah.
finds its way.
I should obviously mention that, the Bitcoin treasury space is a huge focus for Swan and has been for a while. I mean, I've had, Sailor as a service and Orange private equity channels in Slack for years now, batting around ideas here. And so we got pretty heavily involved in this. So we are basically handling the strategy, the marketing, promotion, custody, security, liquidity, all of that for Sequans, which is the Paris-based New York Stock Exchange LBE or Bitcoin Treasury Company. So that's exciting. And then, we have over 2,000 business customers where we do all the custody and liquidity and security and all that kind of stuff for them. And we will probably work with some other, we have an exclusive for marketing and strategy with just Sequans, but we'll be doing all the other services. And we have 6 or 7 companies that are kind of Bitcoin Treasury plays where we're looking at providing the back end for those. So it is an active thing. John Har, one of our MDs, is running that out of New York, and he's kind of like the Bitcoin treasury expert on our sales team. And yeah, I'm in conversations with a whole bunch of banks and a whole bunch of companies that are doing this. And I will just say, like, the number of companies looking at doing this is like 5x the number that I've announced. And the theme is not over. And I do think there are going to be a lot of companies on the bid the rest of this year at least. And it'll probably fall out of favor at some point. I think there's probably at least another good run for MNAV multiples and kind of Bitcoin treasury companies sometime between now and the end of the year. I think the theme will kind of catch fire again. It had a little bit of a break for the summer here, but I think as the market kind of starts to understand some of these things and starts to think about, okay, well, what happens when 6 of these companies hit institutional scale and get over 1 or 2 billion market cap and start to be able to issue preferreds, and now you're able to grow your Bitcoin without tapping the ATM. How exciting does that get? So I think I don't think this theme is dead by any stretch, and I think it is wildly positive for Bitcoin price development.
Completely agree with you. And Cory, man, thank you so much. It's been an absolute pleasure. You're a legend. I really enjoy our conversation. I really appreciate it.
Yeah, yeah, it was great. Next time we do it, I'll be back home in LA, and I'll throw a shirt with some sleeves on. But this is summer, Corey. So
It is what it is. I love it. So don't worry about it. Guys, thank you so much for watching. As always, you will find Cory's details in the link. So go and check him out. And yeah, we'll see you on the next one.
all
Cheers.
right, thanks, Mauricio.